Hello, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com, and today's trading day is October 21st, 2014. I'm going to talk a little bit about the Aussie versus U.S. dollar as we prepare for China data tonight. Some big data coming out of China that's going to often have an influence on the Aussie versus U.S. dollar. We're going to look for a surprise and go with it in our trading here today. What do we have coming out in China? We have industrial production coming out, and the expectations for industrial production year on year is 7.5% gain versus 6.9% last month. So an increase in industrial production in the current month. We also expect retail sales. Retail sales year on year is supposed to dip down to 11.7% from 11.9%. But the granddaddy of them all is going to be the GDP. The GDP is expected to show a rise of 7.2% versus 7.5% in last quarter's data, and a difference either plus or minus off of that 7.2 expectation is going to send the Aussie dollar moving away from its current levels. Now let's take a look at this currency pair from a technical perspective and see what we've been doing. And over the last few days, we've been consolidating this range in a very narrow trading range here for the Aussie dollar. Prior to that, what have we been doing since September 24th, 25th? We've been moving up and down, up and down, up and down. You can see on the daily chart, it looks like a bunch of green and red bars here. No discernible trend here in the Aussie versus US dollar going back to, again, around September 24th, although when the market was finishing, I guess it's moved to the downside here. On the downside, by the way, on the daily chart, we came down, tested the low for the year, actually went below the low, not once, but 3 different days here. And each of the time the market bounced back, bounced back, bounced back. So we've been consolidating this sharp move to the downside here in the Aussie that took the price down in the month of September. Consolidating. It's time for a change. It's time to get out of this range right here. We've been in it for nearly 3-4 weeks here, and so let's look for a break either to the upside or the downside. That's what I'm anticipating here. And tonight is a day with the economic data coming in China that perhaps we get some sort of movement. So if you anticipate a move, you have a better chance of catching a move. So what will we look for? That'll give us a bullish or bearish clue for this pair and a movement away. And when I look at this hourly chart, let's forget about most of this stuff here and let's zoom in and look at our recent area here. And what do we have? What do we have setting up here? Well, we have a trend line across the highs here, and we went a little bit above. This is the hourly chart, by the way. We went a little bit above it at the closing level, but now we're moving down below that level. We have a little trend line down here, and so we have this confined little range right here, and in between is the 100 and 200 hour moving average. Well, guess what? This area right here is going to be important. It's going to be important to determine, well, are we going to move higher? In which case, we're going to go for it to the upside and look for a further momentum in the upside, or we're going to move to below this area and move to the downside. And really, I'm predicating this idea on the fact that we've been in this non-trending range and consolidating and consolidating. Eventually, non-trending turns into trending, and if you can anticipate that, you have the chance to make some good money, because trends are where the most money is made. It's also where the most money is lost, and you have to anticipate a trend in order to catch a trend. And a lot of times when the market's non-trending, that's when you start to anticipate a trend. So we're going to need help from the data. Okay, we're going to need help from something that's going to be different than the 7.2 or 7.5, and then we're going to need the break either to the upside or the downside out of this range right here, and look for the movements to continue. Now, when I say the movements continue, I'm going to look for targets along the way. They're going to say, okay, we're continuing along. Okay, we're continuing along. Okay, we're continuing along. So if we go to the upside, let's say, and we break above this high right here, we're going to need to get above the 61.8. We're going to need to get above this area right here. I'm going to zoom out a little bit here and take a look at this area right here. You see the number of different highs. We have a high here. We have a high here. This is just a remembered line where we have just a bunch of little highs. They don't necessarily make the highs, okay? We extend above, but most of the activity was below this line, right? Most of the activity, yeah, we went a little bit above it. Yeah, we went a little bit above it, a little bit above it, a little bit above it, a little bit above it. But most of the activity, so get above this 88.11 to 16 level right here, and then we're going to be looking up for the highs. We're going to look above the trend line right here and look for the, just taking the highs out along the way. That's where we would be going here for the Aussie versus US dollar. You get out of this range. So I think the key is to get above the trend line, maybe get above the high for the day in the 61.8 of this move to the downside, then get really the 11 to 15 level. I want to see the price move above that with momentum to the upside, and then we're going to look for the highs here around the 88.30 level, and then we open up the door for testing our high. And that's the way we're going to look. Now, on the downside, what do we have? We have the 100 and 200 hour moving average. We need to get below that level. If we get below that level, then we're going to look toward breaking this 38.2. Now, this 38.2, if you take this move to the downside, look at the 38.2, we found support here over the last few days down against that 38.2. So that's going to be a key level right here to get below. Get below the 87.45 level. Look for the market then to extend down to the bottom side trend line. That's going to come in around the 87.11 area, and we'll go from there. A break of that level starts to head down toward this area where we've spent most of our time above this area. Yeah, we went below it. Yeah, we went below it. Yeah, we went below it. But most of the activity, or most of the extremes, were down here, right here, right here, right here, right here, against this yellow area. And we got to get through that level in order to push the market down through that. So that's my look at the Aussie versus US dollar, predicated on this idea that we're going to get some surprise out of China in the data here tonight. If we do, look to go with it, but understand where the technical levels are, because the technical levels are going to tell you whether we're going higher or we're going lower. My name is Greg Michalowski from ForexLive.com. Good fortune with your trading. Bye-bye now.